FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is May 14th, 2020. Well, perhaps the only way to make money in the current market is being a trader, and that requires a whole nother set of skills. If you've been making money in the market or not making it, I'd like to hear about it. Why don't you email us, kl@kerrylutz.com, kl@kerrylutz.com. I apologize for delays getting back to you. I've got about 100 emails in the queue, and it's not that I'm that slow. It's just the fact I've been getting so many of them from you. But by the end of the week, I will be through the queue and we'll be on to fresh material. So without further ado, we got our good friend Chris Vermeulen with us, thetechnicaltraders.com. And Chris, it's great to have you back on. So what are you seeing here? First, let's hit the stock market.
There's a lot. Yeah, there's a lot going on in the stock market. I mean, we're seeing record inflows on TD Ameritrade with brand new traders, like new accounts, and they're talking about how to put in orders. I mean, we're talking new traders. This has started a whole new area of trading for people, because people are stuck at home and now they see the volatility and they hear about day trading and swing trading. And so it's created this big feeding frenzy to help drive the markets even higher, and add the Fed-induced kind of stimulus, this Fed-induced rally, and spring is in the air and the COVID is fading away. I mean, everybody's feeling good. And I think a lot of people think the bull market or the bear market is over and then we're starting a new bull market. And that's the vibe that everyone has. And people are just piling in. And the crazy thing is, to me, it's the exact opposite. And that's usually how the markets work. So to me, this market is stalling out. All the signs are there from a technical standpoint. Even the fundamentals now don't even support what's going on. So, I mean, there's a lot of damage that's been done. And I think we're looking at much lower prices. We're at least a double dip in the stock indexes over the next month or two. So it's going to be really interesting how price unfolds going forward.
Yeah, we've had quite a recovery rally, haven't we?
Yeah, I mean, we've seen the SP 500 rally 35%. More or less, it fell 35, and now it's rallied 35. The NASDAQ fell 35, and it's up about 40%, or was a few days ago. But the crazy thing is, these are normal bounces. I mean, when we had a 40% collapse in 2000 in the NASDAQ, that happened over only a few weeks, very similar to this. The market fell 40% and then bounced 46. And it came up to a Fibonacci retracement of the 618, which is where all the indexes more or less have hit right now, which is resistance. And we're starting to see increased volatility. And the majority of stocks are lagging. You look at the NASDAQ, it's performing exceptionally well. Huge tech companies, of course, they're tech. They're benefiting almost from this COVID, and that's pulling the whole market higher. But when you look at the overall market, look at the small cap stocks, the majority of companies are underperforming, breaking down. Some of them are starting to break new lows below the March lows. So there's a lot of damage going on that people don't see, and they think things are peachy, but really almost all the stocks are rolling over and heading south. And the big thing right now is people don't realize they're paying a premium for shares more than they were back in February, because now earnings are really bad. And so the PE ratio is out of whack even more. So you're paying more per share, per dollar income than you were before the crash. And people don't seem to get that. Like, things are way worse at this price than they were actually a month and a half ago, 2 months ago. So the fundamental side is going against them as well. And I think a lot of people are totally blind to that idea, that concept, or the reality, really.
Yeah, well, it's interesting. And I guess you would expect that people are going to get sucked in. And what you say is true. The stocks are definitely higher. We could see for second quarter a 35% decline in GDP in the States here, which is unprecedented.
Yeah.
So what's an investor to do here?
Yeah, well, I mean, if you're a long-term investor, somebody who's not even a trader, and you've got a retirement account of some kind, this is when you need to step up to the plate and you need to figure out how to profit from this volatility, a potential bear market, which I think we are heading into for U.S. equities, because this is it. You only have 2 or 3 of these in your lifetime, maybe 4, where you get to ride a full bull in a full bear market. And if you don't ride that bear market properly, if you're not on the right side of it, profiting as the market's collapsing, or if at least you don't just step out and just move to cash, bonds or cash, you really are damaging your long-term growth. If you play a bear market correctly, you can retire 5, 10, 20 years younger or sooner if you play them correctly, because there's just so much power. Not only do you make money as the market falls, but then you've got more money than you've ever had before to put into a new bull market that is then going to rally several 100% and pay dividends. And so this is the biggest time that anyone with a 401k or an IRA, if you're in Canada, an RSP, a TFSA, any type of retirement account, I mean, you need to get a service that tells you when to be long equities, when to be in cash, and what ETF to buy when the market is falling, so your money actually goes up in value. And so that's the big thing for an investor right now, is to step back, ask your advisor, what are we going to do if the market falls 40 or 60% from here? How is my portfolio going to handle it? And figure out what their risk level is, because I know the financial advisor will never say move to cash. They don't get paid. Maybe move to bonds. That's a safer play. But really, people need to understand how to take advantage, or just at least get out of the market while we're in this uncertainty in this bear market territory, because it's the difference between retiring at a young age with money and working till you're 75, 85, right?
Right. So your hypothetical investor here who's poised to cash in on this, what are you supposed to do?
Well, in order to cash in on this, you need to know when and if you need to switch your positions. Most people are long equities in their retirement accounts. They'll have a mix of equities and bonds. The equities portion, if we get into a bear market, will need to be liquidated and either put into bonds, or better yet, and this is how you make way more money, is you buy an inverse ETF on the index. So if the stock market falls 1%, this ETF will go up 1%, because there's a lot more gain to be made from falling prices in a bear market than there is just to move into bonds. Bonds really don't do a whole lot during the entire bear market. The only time bonds really spike is at the very final stage of the bear market, and you'll see it quickly have a huge spike, a blip, and then it'll fade back down. And it's really tough to time bonds. That's what bonds did in March. They had this huge spike the first 5 days of the crash, which was really less than a third of the crash. That's when bonds made the spike, and that was really it. So bonds aren't the best way by any means, or a good way to kind of hedge and protect your money, but you have to trade with the trend. In a bull market, you want to own equities. The trend will go huge distances. In a bear market, you want to be inverse or have a net short position on the indexes. So as this trend plays out over the next 3, 6, 9 months, you're profiting from the falling market that could go down as far as potentially 60% from where we are. Sounds extreme, but I mean, nothing is out of the picture of what's going on in this financial market and how unstable they are. So,
Do you think we'll see like another crash like we saw in March?
I hate to say it, but I do. I mean, that was just kind of the shot across the bow. I mean, this is what happened in 2000. The markets rolled over, sold off like this, and bounced for about 3 or 4 months, and then they went down and hit those lows, and then they broke the lows, and then we were in a bear market for a couple of years. I mean, I don't think that's going to drag out this long. The average bear market is about 8 or 9 months. So it's short-lived, but I mean, it's painful to watch 10 years or 8 years of gains just evaporate when you could actually, profit from it and reinvest. So I'm concerned that that's what's going to happen and unfold here, and you got to be ready for it. And that's what I provide as my technical investor newsletter are these investor signals. And it's really simple. We trade 2 ETFs. You either own this one, you own that one, or you're in cash. It's really simple. You can call any broker, any advisor and say, put me in a fund that owns the SP 500 or the NASDAQ or is short those, like an inverse fund. So, it's for an investor, that seems really extreme to have to move your money in that kind of manner. But extreme times call for, a change, and you can't just ride the roller coaster. To me, it's not worth the money. It's worth the call, the investigation with the advisor to figure out if you're positioned for much lower stock prices.
Yeah, that makes total sense. So what about the prospect of precious metals and mining stocks?
FSN Radio. It's all about what's next.
Lumina Gold, ticker symbol LUM on the Toronto Venture and LMGDF on the OTC, is yet another of legendary mining investor Ross Beaty's Lumina Group. It's advancing the largest primary gold deposit in Ecuador. The resource is estimated to contain 16.7 million ounces of gold and 2.2 billion pounds of copper. At just $7 US per ounce gold equivalent, it trades at an incredible 13% of its net present value. More good news is on the way with an updated PEA study expected in Q2 of 2020. It has unparalleled infrastructure. There's grid power to camp with plentiful, inexpensive hydropower available. It's close to 2 ports and is just 8 kilometers from a paved highway. Water is plentiful. It's at low elevation, and the closest community, which is very supportive of Lumina's effort, is just a 7-kilometer ride. With all this going for it, it's likely to follow the typical Ross Beaty formula, which means big returns to shareholders. Find out more and sign up for notifications at luminagold.com. That's Lumina, Lumina gold.com.
The Financial Survival Network. It's all about what's next.
Yeah, well, I think March was it was a real broad market sell-off, and it was pure panic from 2 aspects. First was people didn't want to lose money. Everyone saw that earnings were going to be bad, so the fundamentalists, the big funds dump a lot of their shares because the fundamentals aren't going to make any sense. And of course, everyone saw that, and that's why they bailed out. But then also there was another layer. The more important layer was people were afraid for their lives. We had no idea how big the spike was going to get in the virus. It still is a scary thing, but it definitely feels as though we're kind of over that hump now. But people were scared for their lives. And when they're scared, they don't care about money. They just liquidate everything, which is why we end up seeing bonds end up correcting, 15%, gold down 20%, junior miners down 57%. So I don't think we're going to see something like that quite again. I think this time the fear of death is now kind of over. Now it's going to be more strategic. People are going to start looking for the hot pockets. Where do I go? And gold has been the leader. It broke out last year. It's in a full-out bull market. It's primed and ready for a run to 2,000 right here, based on the current chart pattern over the last 2 months, a month and a half. Silver and the gold juniors aren't in a bull market yet. They're primed and ready. They haven't broken out. But the large cap gold stocks like GDX, that holds a basket of them, has already started a new bull market. And so those, I think, are going to be where there's going to be some hot pockets. And I like gold, physical gold. It's not going to be the biggest percentage performer, but it's the most stable asset. For example, when you have some broad market selling like we have on Wednesday, markets are down 2 to 3 to even 4% on the Russell. The only things green on the day are gold and bonds. And so that's where I think they're going to shine. The miners are trading lower because stocks, even if you're in a hot pocket, tend to get pulled down with the broad market. Like a tide going down, it pulls all boats with it. So the commodities themselves and bonds kind of detach themselves from the equity side and can hold up and move higher while they're selling in the stock market.
Right. Yeah, I got you. And it makes total sense because mining stocks are stocks, and the baby gets thrown out with the bathwater. Interest rates, have we seen the low? Can they possibly go any lower?
I don't know. I don't follow interest rates too much, but I saw something yesterday that Trump, I think, was talking about how he wanted zero interest rates. Somebody mentioned it. They said they read it in a tweet or a comment or something, but I think rates are probably going to go lower if we have more fear. I think bonds are going to continue to rise. So I think we're going to go down and get darn close to probably zero. That's just my gut feeling. I don't think I want to go to negative just because I still haven't wrapped my head around it. But who knows? I mean, I wouldn't rule it out. It's happening in a lot of other countries. So.
Yeah, and that's disastrous for the world financial system. It's not set up for negative returns.
Well, if they go negative, I mean, why would you want to hold a fiat currency and pay the bank when, and most currencies are going down in value. The dollar has been strong recently, but they're printing so much, it shouldn't be strong for too long once eventually momentum catches up and the dollar starts to roll over. So that's where I think if we go negative, I think that's where precious metals are really going to shine, because the currency will probably start to be losing value. So you don't even want to hold the currency if it's losing value, and you got to pay to store it. So it's junk with junk. It's two negatives. You could just go out and buy some blocks and bars of gold and silver, throw them in a vault and pay a nominal percentage, maybe the same or a little bit more than holding a fiat currency in a bank. But at least you have an asset and something with physical value that should continue to go up long term in price. So if we go negative, I think it's really going to spark that precious metals movement in a bigger way.
Yeah, that makes complete sense, especially for the larger investors, because they could buy a T-bill or just buy a lot of metal and throw it in the vault and kind of just leave it there, because the negative rate, that's the equivalent, or it might be even higher than your storage costs for putting metals into a commercial vault.
Yeah.
All right. So what other markets were you looking at that you need to be aware of?
Really the only other, I wrote an article about the leaders and the laggards, and you look at the tech sector, it's been on fire for obvious reasons. Tech's just cleaning up because everyone's stuck at home and using technology services and work from home services, conferencing. But there's the laggards. You've got the transportation index. You've got small cap stocks in general. You've got the financial sector. these are dogs. These are terrible. These are underperforming. They're showing signs of weakness. Airline stocks are I think UAL is at the point. I haven't looked at it since this morning, but it was testing the lows from March. It's about to break new lows. It went from $90 to $9. There's some really weak pockets. And if we enter a bear market and you're a stock trader, you don't want to be shorting, in my opinion, you don't want to be shorting Netflix. You don't want to be shorting Apple and Google and Tesla. You actually want to be shorting the ones that are underperforming already, because there's already no buyers. And when the selling starts, it's going to just collapse because there's no one there to support the price. If you go to buy into a tech company during a bear market that's doing well, there's all kinds of bargain hunters and funds that have to keep buying into the market. And so there's going to be support on those, and there's going to be lots of people accumulating shares as it gets down to hey, this is a good value for, Apple. Whereas if you've got a really crappy stock that's not performing well and people are like, I don't know, this company's dying, it's not looking good, no one wants it, it's a no-namer. There is no support. Those things just keep falling, right? They'll fall 70, 80, 90% in a bear market. And those are the ones you want to actually short. So going forward here, you got to be looking for some of the underperforming stocks or sectors to play, like the financials. I think they're going to have a big collapse. And the airline, there's a airlines ETF, JETS, JETS. I haven't looked at it in a week or two, but it carries the basket of airline stocks. It's probably breaking to new lows or close to that today. And I think it's going to go a lot lower. I think the airlines they're going bankrupt and they're going to have to get bailed out. But just because they're getting bailed out doesn't mean the share price is going to stay up here. They're worthless companies at this point. So their share price is probably going to fall and fizzle out until there's some deal made with, some too big to fail airline package.
Yeah, I see what you're saying, and it makes complete sense. And I guess we're going to find out probably pretty soon.
Yep.
Interesting that they've retraced as much as they have, where NASDAQ's actually positive for the year. And how much longer can that go on? We will see. Anyways, just tell us where we find your work and how we subscribe.
Sure. Yeah. Well, I provide my technical analysis, investing signals, and my swing trading signals at thetechnicaltraders.com. And depending on the newsletter, you get a morning video each morning before the opening bell, and I recap what happened in the day yesterday, what's happening in overnight and pre-market, and what we expect today. And of course, recap any positions we have and if they'll be affected, hit any targets, or enter new positions. So pretty straightforward. You get to see what I see. I draw on the charts, I talk about it, and then I send you every trade that I do through my mobile app and email. Straightforward.
Very cool. All right. Well, we have a link in the show notes, as always, to Chris's site. You got a question for Chris? Just email me, kl@kerrylutz.com, kl@kerrylutz.com, Twitter feed @kerrylutz. Facebook page is Financial Survival Network. And, of course, our website, financialsurvivalnetwork.com. Chris, always appreciate you coming on, as usual, and we will talk to you again real soon.
Hey, thanks, Kerry. Always a pleasure.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.